You know, chilling there at the Maldives. I'm just speaking that into existence. You know, Maldives. Ah, bikinis. Oh, okay. Hello everybody, welcome back to my YouTube channel. And if you're here for the first time, welcome. If you're a returning subscriber, a veteran in this channel, welcome back for yet another exciting episode of Risk Money and Insurance, okay? So if you haven't subscribed, please hit the subscribe button below. Don't forget to hit the notification bell so that you get notified whenever I post a new video, which will be on a Thursday morning at 7 a.m. And so we are continuing with the shades and the conversations, right? But anyways, let's get into this video. So what are we talking about today? Today we're talking about balloon payments, right? Are they all bad, honestly? And how did this conversation come about? So I feel like we should just call the series the conversation series, because I'll be letting you guys into my head a lot to sort of, you know, share some of the things that I think about, share my opinion, my 2 cents on stuff. And this is just one of them, like balloon payments. And honestly, when you're about to buy a car, it's something that you consider, right? Because you're like, okay, I'm still fairly young, and I might actually not keep this car for long. I might actually want to change my car in a few years, which in South Africa, actually, this was actually proven statistically. Men in South Africa change their cars quite a lot. Like they literally just changed 2-3 years. They're changing, getting a new car and all of that. So it's also one of those things where you like, I'm actually getting this car now to actually say, I would just want to move from point A to point B. Like if your job requires you to actually have a car, if you're like an accountant and you need to go to offices and stuff, clients' offices, and you really like need a car for some of these things, public transport is not really reliable. Let's be honest, especially in South Africa. So it's actually one of the things to like consider, to be like, okay, I'm getting a car, but then now you're looking at your salary and your car and you're like, well, even with the smallest car, it's like my salary is still not really enough for the smallest car. So what must happen now? I really need a car, right? So these things happen, right? And I think this is the whole idea behind balloon payments, why they were actually they were set up to begin with, to say, even if you can't afford your car, then we can sort of work some arrangement for you to be able to, you know, afford your car. So how this arrangement works is, you know, let's say your car is like 200,000. We can say, it's fine. We can give it to you for like 150, and the 50,000 you have to pay it back at the end, you know, of the payment period. So let's say you get financing for your car, which is like 5 years. And then after the 5 years, oh, this is so weird. After the 5 years, you then decide to say, you know what, after the 5 years, then you have to pay back that balloon with interest, right? So that's how the whole notion is sort of structured. And so what happens when you actually, you know, take out that 50,000 of the 200,000 cost of your car? So what essentially happens is, of course, you tend to pay lower installments. That's number one. You also get to save on interest a bit, like in terms of the repayments that you're making, right? So instead of them calculating interest on a loan for 200,000, that they now calculate interest on a loan of 150,000, which can actually, you know, if you do your math or go online, you'll actually see like, okay, cool, we're kind of like saving on interest. But now my thing with balloon payments is that by the end of the 5 years, for example, if you decide you're going to keep your car for 5 years, by the end of that 5 years, you need to have that 50,000 plus some interest, which they will tell you, right? So you still have that balance outstanding. And we all know that a car depreciates. Like the minute you take your car out of the garage, 20% of the value, it's gone, right? So already you like, single day, it has dropped. So over the 5 years, of course, it will drop in value, right? And you get to 5 years time and you still owe the bank, let's just say 60,000, for example. You still owe the bank 60,000. So now you need to actually pay the bank 60,000 for a skorokoro that is sitting in your garage. So it's just like, yeah, that's just one thing that I'm not really like comfortable with. And then the second thing, someone can be like, oh, okay, cool, but it's fine. I mean, you don't really have to, if you didn't save over the 5 years, then you don't really have to pop that out. You can actually just trade in your car. But then sometimes the value of your car might actually be lower than that 60,000, right? So that's another thing. And the bank will be like, no, it's fine. The dealership will be like, no, it's fine. You can actually trade in your car, take another car, you know, and then we will refinance your balloon. And for me, that is where the whole problem is. That is how we get trapped and stuck into the system. Because now, imagine if you are going to refinance your balloon. And then now, the new car that you're buying, you still, in essence, you're still repaying the old car. And you are now like repaying the new car, right? So it's like two cars combined. And so what was happening in the 5 years? So in essence, what you were doing, you rented that car for 5 years, but the rent that you were paying for the car was the installment that you were paying. And then come 5 years time, you don't have the car to actually say, I own this car, because you've traded it in because you couldn't, you know, pay the outstanding balloon and all of that. So for me, I was just thinking about this thing. I'm like, no, man, this thing looks like a scam, honestly. It feels like a scam. And which is why a lot of financial advisors will tell you that if you're going to buy your car using a balloon payment, then you can't afford it. Get a smaller car. But at the same time, you know, it's one thing. It's one thing, you know, to say get a smaller car. But what if that smaller car, it's not meeting my needs as an individual? I think like we need to do a whole video on buyer's regret, because it's something I feel that we don't talk about. I think it's going to be the next video, buyer's regret. But anyways, so there is that you're stuck between the car, maybe perhaps the car that you want, and a balloon, right? And I think a smart way, because I accompanied a friend to a dealership recently, and I was just there, man. I love listening and asking questions and just hearing, you know, what salespeople think about balloons. Salespeople are very comfortable with balloons. They just want you to pick a car. And then after you've picked a car, they will arrange the paperwork, and then they will tell you we can even do balloon. And then the way they sell it, right, is that, you know what, you're not going to keep this car for long. And for me, that was the most shocking thing. When they say, you're not going to keep this car for long. You're going to, you know, after 3 years, 4 years, you can trade this car in, come back and get a bigger car. And I'm like, damn, they're so good. Like, they're so good. The argument, the lady made a very convincing argument. I won't lie. That lady made a very convincing argument, right? To be like, you're actually not going to keep this car for long. So why would you want to, you know, pay for the full thing? Whereas you can get a balloon, lower your installments, and then free up some money. And then later on, after 3 years, come back, you know, trade this car in, get another car, right? And I was like, damn. So we're like, okay, so let's trade in the car, get another car. Sounds like a good deal. But long term, I mean, we're actuaries, right? As an actuarial, aspiring actuary, I often love thinking long term. So long term, if I do this, so I get a car, trade it in after 3 years, get another car, trade it in after 3 years, get another car, trade it in after 3 years, then I might actually spend the rest of my career buying and trading in cars and not really owning a car. So like renting a car for the rest of my life. That's what it felt like. And I mean, it's something that, in as much as, yes, it relieves, I won't lie, it reduces, you know, your installments. Even if you can check the car affordability calculators online, it will show you, like, it does make a difference, you know. Sometimes the difference can actually be close to 1,000 rands or even over 1,000 rands, depending on the interest that you're getting and also how much your car is and also what percentage of, you know, the total cost of the car you're taking as a balloon, right? So I mean, it's quite interesting to see that this thing actually works. It works. But then I think as an individual, it's something that you must really, think about to say, if I'm really taking on a balloon, do I understand what is at stake? Will I actually save up to pay it up? Will I trade in my car? Like, what's my plan? What's my game plan in me actually taking out this balloon? And it's something that sometimes dealerships are so eager to sell you the car in such a way that I had stories, man. I had an uncle who was like, because he read the fine lines in the contract, and the car was actually coming with a residual value, which is sort of like similar to a balloon. And he was like, this is not part of the agreement. And it's something that, you really have to think about, because you're excited. I'm getting a new car, I'm going to be driving, now like getting my freedom, I'm going to be walking around. It's something that you might not actually consider, but it has long-term implications. 5 years down the line, you're thinking you're done paying off your car, and then they're like, sorry, you still owe us 100,000. Like, 100,000 for more and then they refer you to the paperwork which you signed on the day, while excited, while popping champagnes and getting those flowers and balloons by the dealership, and you actually forgot to like check the contract and really make sure that you agreed with the whole process. So okay, I've been rambling and telling you guys stories, but what's my main thing here? And what I'm really coming here to say today is, in as much as we say balloons are bad, it depends on, how you are actually gonna play out, how you intend to do the thing. What are your goals, or what are your plans for, that car that you're buying? Sometimes it might be, I actually just want something that's affordable, something that I can actually pay off, and, something that I know I'm not going to keep for long. So if right, you can work out an arrangement with your dealership to say that you will trade in your car when the value of your car is actually sufficient to cover the outstanding amount on the loan that you would have taken out and the balloon. And that is very important, because if you just traded in at a time where the value is actually lower than what you're owing the bank and the balloon, then you need to find a way to refinance, that outstanding amount. So that's quite important. And another thing, from like an insurance point of view, insure your balloon as well. So this is like, someone would say, oh no, but I'm getting financing for my car for like, 150,000. And when they now go to the insurers, they insure their car at that value minus the balloon, which is like 150,000 and not the full 200,000. So that is very important. Sometimes, if it's like that, then get a shortfall cover, because the last thing that you need really is to take out debt to pay out your balloon. So that is all that I wanted to say in this video. I hope you found this video useful, and it's to say that, in as much as we bash and shame balloon payments, I think the important part is understanding what you're actually agreeing to, and having a plan as well to say, how are you gonna get out of this shenanigan that you're getting into? But anyways, I hope this video was useful. I love you guys so much. I will see you in the next video.